What's up, guys? What's going on? All right, so I wanted to make a quick video for traders that are out there who don't really understand market movement. And when I'm saying that, like I get it, right? We have the ability to make a shitload of money at any single day, and that's the allure of trading, right? It's the fact that you can make, your 9 to 5 paycheck or even your salary in a day or weekly or even in an entire month, and people love that. However, the thing about it is this: not every single trading day is your ability to make that happen. So what I want to do is I want to make this video to help out the traders out there who don't understand this aspect or this concept of things, but really there's times in which you should not be trading or you just shouldn't be in the markets overall. So this video, I'm gonna break it down so you can see exactly what I'm talking about. And honestly, my idea of it, I think there's pretty much three best times in which you should not be trading. You should avoid the markets overall. So what I want to do again, I want to break those three things down. And then I also want to break down US 30 and also what happened to me this week because I kind of fell victim into one of those things, which is funny because I'm making this video. But again, you can also learn from my experience because again, it doesn't matter how successful you are in trading. Sometimes you are going to make some type of rookie mistakes, and that just boils down to it. All right, so getting into the thing. So for starters, there are, as I said, in my opinion, there are three best times in which you should avoid trading. So I'm going to list those things real quick. All right. So the first time is this: you want to avoid trading after losing big or a big amount or back to back trades. Oops, oh, come on. That's the first time. Let me move this. I do it this way. All right. Now, the second one is you want to avoid trading in market conditions that doesn't allow your strategy to strive. And then lastly, you want to avoid trading when you're in your emotions. Oh, come on. Let me do it like this. Huh, that's funny. All right, that's one. Just bear with me, guys. I'm gonna speed this video up so you guys have an idea. Oh wow. All right, and this could be angry, tired, feeling down, etc. All right. Now, listen to it one more time. So, the three times in which you should avoid trading. Number one, after losing big amount or back-to-back trades. Number two, in market conditions that doesn't allow your strategy to thrive. And number three, when you're in your emotions, meaning that you're angry, tired, feeling down, etc. All right, so bringing down each one. Now, the first one, after losing big or amount or back-to-back trades. So, a lot of times, this right here, right, if you lose a big trade, which you shouldn't be doing as well, right? Because if you're losing a big trade, that means that your risk management is probably off, unless you're really just striving to increase your tolerance. But besides that, though, after losing a big amount, you want to avoid the idea of revenge trading. By avoiding that, it'll allow you to just be patient, let the market do what it does, and then you can look to see a better opportunity for you to enter the market. Another thing for myself again is back-to-back trades. Right. So if I lose back-to-back trades, my third position, I'm going to lower my lot size. I mean, just what it is. It just makes a lot of sense to do so. But besides that, after back-to-back trades, you gotta take a breather, right? Because again, you're not in a correct state of mind to lose those back-to-back trades. And if you do, because that does happen, you want to reevaluate things, right? So that doesn't mean that, all right, I just lost back-to-back trades, I'm gonna enter again. No, you lost back-to-back trades. Get up for a second, go take a walk, come back, sit down, look at the market, see exactly why you went wrong, see what's going on in the markets, and then from there, if you decide to enter again, you can go about doing so. But if not, if you would just want to take a break, you should do that as well, and then just wait for another trading day. All right, number two, in market conditions that doesn't allow your strategy to strive. This right here is extremely important because again, we have the ability to trade every single day, but that doesn't mean that every single day it is going to be your opportunity is going to show for you to enter the market. So you have to be mindful of what's going on. And that also means that you're doing the work before the actual trade comes into play. That's very important. And what I mean by doing the work is understanding what's going on, right? What is the current market structure are we in? Are we in a low, high, high, low? Besides that, where are we at in structure? Are we towards the beginner structure? Are we in the middle of structure? Are we coming towards the end of structure? Once you have that set, right, where's my support resistance? Where's my fibs? Where's all these things that's coming into it? And then lastly, where exactly does my system or my strategy strive? Does it strive in market conditions that's consolidation? Do I'm looking for breakouts, trendy? All those things is needed. Once you have that set, then from there you can determine if your strategy will strive within that market. And you have to remind yourself, adding to that as well, before I go to the third one, that just because you have the ability to trade any single instrument, right, whether that's Forex, whether that's commodities, indices, options, and so forth, it doesn't mean that every single thing is going to move the same exact way, right? Just because the dollar is weak right now doesn't mean that across the board the dollar is going to be weak with every currency. Just because Tesla is kind of down doesn't mean it's going to be like that for the entire day. So you have to, or even indices, right? Just because we have some positive or negative news with the economy doesn't mean that US 30 is going to go up or going to go down, right? It's different things in which will allow your strategy to strive. So you have to be mindful and understand exactly when those are going to come into play and when you stay away from that and it doesn't show. And then lastly, the third one, when your emotions, whether that's being you're angry, you're tired, you're feeling down, etc. This right here is extremely important, mainly because, again, like even for myself, if I'm angry, I know for a fact that I'm not in my right state of mind. So that means I'm going to avoid trading. Now, the thing about that is this, you have to accept this as well. I also know that, all right, I'm not in my right state of mind. And this could be a day in which the market jumps up 500 pips or just drops 100 pips. It's okay, right? What the thing I don't want to do is I don't want to jeopardize losing my anything in my account just because of the fact that I want to catch that move. Like at the end of the day, we have to be aware and be alert. You're not going to catch the entire move, right? I know a lot of traders strive for that, but it's impossible. You're not going to catch the entire lowest pip to the entire highest pip of the move. You're just not going to happen. So regardless, you're going to be leaving money on the table. But besides that, though, it's like you have to accept that there's going to be another trading day. Once you accept that there's going to be another trading day, it allows you to accept whatever happens. There's plenty of times in which, especially this year, in which I was dealing with a lot of health issues and I couldn't catch a lot of moves that was going on. Now, yeah, I'm going to be upset. Like, damn, like that was a great move. However, it's like at the end of the day, I'm not in the right mental or physical place when you go about sitting down at my desk and actually enter a position. So I can't do anything about that. And again, guys, that's across the board, whether you're tired, feeling down, and etc. So those things are very mindful for you to go about doing so. All right, so now that's out the way, I want to show you guys US 30, right? So a quick breakdown and breaking down my strategy and what worked and what didn't work for me as well. Now, for starters, I'm going to go to a higher time frame to show you guys exactly where I pulled things from. And then beside that, though, Friday was an amazing day, right? Friday, we literally had Powell came out. He was very dovish, and obviously the markets loved that. However, before that, throughout the week, this was a very terrible week for the Dow. Legit, you guys can see all this moving back and forth before we had, again, a nice breakout and then a nice harami, and we had to continue moving forward. But going back up into these into these breakdowns, not market breakdowns, but into these markups. So what I did, I took this zone, I took the high point of right here, just from Tuesday, July 16th at 6 p.m. And I took that low of Tuesday, July 16th at 2 p.m. And I just dragged that to the future. Nice little gap right there. The reason why I did that, because as you guys can see, right, for us to pretty much break out of that, we need to have a huge push out. Pretty much we're still in this as well. Nice rejection. Then from here, a lot of rejection from this zone until, again, we finally broke out there on Friday. So that right there was very important to me. Then I dropped down to the hour time frame to see like what exactly am I looking for. So these candles right here, no, I'm sorry, these horizontal rates wasn't there, but this one is present. So I understand that the market came to 748. I also understand the market came down to 605. I took 605 from the 15. Was it 15? No, it was from the hour. I took that from the hour as well. So the reason why I utilize that is because from this candle was actually lower, but from this candle on Friday, July 19th, 9 a.m., the market continued to plummet. And then from there, we can see how the market react around that. So I knew that was very important. If we also break that, more likely the kind of area would come down to. Nonetheless, though, on a 15-minute time frame, these 2 points were very important from the start of the week, right? So we go to it. We have this gap right here from Monday, August 19th, and then we also have that low from there as well. So I wanted to see if price was going to react between 909 and 862. And if we did break, if we were going to come down again, as I said, to 748. Looking at this again now, the market, it was pretty much like trash. Again, as I said, I did get hit on Monday. I also got hit on Tuesday, and then Wednesday I couldn't really do much as well. So I'm saying that to say this right now. I understood that coming into this previous week, I was going to be busy. Why? Because again, it's my wife's birthday. We had a lot of other things to take care of before that, and then on top of it, I have a newborn. So I understood that. Again, I also wanted to be in the market, and I was fully aware of that as well. So on Monday, was it this one? Right. No, that was Tuesday. On Tuesday, so you guys can see like we have a nice move over here that pretty much price had came to, and then from there we started dropping. Now again, I'm pretty much asleep at that time. I don't like to enter the market until about like close towards market opening, mainly because again, again for those London traders, I understand it, but again for myself, I'm just not worried about that. I'm worried about the actual New York Open, and we see what price does from there. And typically, I like to be done within like about an hour, 2 hours tops, if anything else. So nonetheless, though, so price came over here right now, as you guys can see, right, we're pretty much more so towards market open, which is around this area. So what I was looking for was I was looking for this support to actually hold, and it kind of did. So market came up, we literally pushed up over here, and then started dropping. And then from there, I took an L. And then the next day, it was over here. So the next day was Wednesday. Same thing with here. Price had came up. We pretty much did not break out of that zone, which is very important. And then from there, this one was a small win. And then on Thursday as well, the best trade would have been over here, which I did not take that because, again, I am sleeping. So I took it towards market open, which was over here. So market up the same exact thing. Price came up. We pushed out of this one. I closed out in profit, and then we had a nice plummeted. This right here, guys, again, I ended the week with a W, small W, but this right here, guys, it's just nasty market movement. The best trades that happened was on Friday, especially if you go to a lower time frame. But this over here, huge breakout, reversal pattern, breakout back down to support held, huge engulfing, and price continue. This right here is is conditions in which my trading strategy will prosper. This over here, truthfully, I really shouldn't have been in the market again for starting because it wasn't really great. Also, I wasn't really I wasn't really alert when it comes to like my physical time. I was doing a lot of back and forth, and it was greed, right? But again, I also understood that, right? It's like, okay, I knew that we had a lot of news coming out. I wanted to be in the market for those things, so that also plays into it with greed. However, again, as I said, the market just wasn't going in my favor, and sometimes that does happen. So to pretty much close the video in full, again, I hope this was really beneficial for you guys to see when it makes sense for you to be in the market, when it makes sense for you to not be in the market, as well as when it makes sense for you to understand how the market moves, as well as what boils down to what you're doing at work. It is beneficial. Join my Discord. We break down the markets every single day. Break down markets when it comes to live trading, when it comes to news coming out, how to affect the markets beforehand as well as after. If that's something you guys are interested in, click the link in my bio and I will see you inside. Take care, guys. See you in the next video.